Today's video is a suggestion that I received from Timmy Pom Pom. So thank you very much for the suggestion. And as I always say, if there's a stock you want me to take a look at, want to know my thoughts on that company, or just have any general questions, please always let me know. I really appreciate the ideas for some new videos for me to make, and also just enjoy being able to help you and maybe help you understand something a little bit differently than what you might typically hear. Now, while this is not going to be part of my Watchlist Wednesday series, we are going to be taking a look at rocket companies and their recent IPO. Hey everyone, and thanks for joining me today. My name is Matt, and as I mentioned in the intro, today we're going to be taking a quick look at Rocket Mortgage and their IPO. Of course, I've just got to start off by saying this isn't financial advice. Please don't take it as advice. This is just for your entertainment. If you have any real questions about managing your portfolio or feel that you need assistance, speak to an advisor. They're awesome and they can really help out with you making sure you're on the right track financially. Also, I should mention at the beginning here, I don't typically invest in IPOs. I usually prefer for companies to be on the market for at least a year, but if not two, before I invest in them. And the reason being is because when a company hits the public markets, first thing is we don't have that much financial data about them. Unless for some reason something else made news headlines, we can really only look back at a previous year, maybe two, for us to get some information. But it's not enough information for us to calculate some of the basic things that we want to look at, such as like a basic PE ratio for the past year, or cash flow analysis can be difficult. So I'm not typically a huge fan of IPOs. You can argue I've missed out on some good opportunities if we look at a company like Beyond Meat, but you can also look at a company like Blue Apron, who went or had their IPO and turned into a penny stock within like a week. So IPOs tend to be a little bit more volatile, a little bit more risky than what I like. And one thing I didn't also mention is sometimes when a company hits the public market, they might still have some loose ends that need to be tied up. And I'll give an example about that later. But that's generally why I'm not the biggest fan of IPOs, unless it's a company that I firmly believe in. So since this isn't a typical Watchlist Wednesday video, or since it's not part of that series, this is just going to be more of a high-level overview. We won't take too deep of a dive into this company itself, but just some notes I have, and I figured the easiest way to break this down would be pros and cons that I have for rocket companies and their companies underneath them. And I'll start off on a positive note, and we'll talk about the pros for rocket companies. First one is that they've been in business for 35 years, which is a very long time, and it's a really good thing to see given that their competition are pretty well known and established banks. Think of like a Wells Fargo, a Bank of America, a SunTrust, a PNC Bank, BB&T. So they have some pretty stiff competition, and having been in business since 1985 really goes to show that they are good at what they do and well received by consumers for the most part. Another pro that I have for rocket companies is that they are a technology driven company, which again, in today's day and age is essential and really needed for your business to survive. A lot of banks we've been seeing are struggling with adapting these new technology features or just having everything automated through apps or better website designs. And so for a company like Rocket, whose sole focus is on lending for right now, it's really good to see that they are able to adapt with the times and overall change their process to make it a better fit for the consumer. Also, they are the largest mortgage originator in the US, and by a long shot, by like over 100 million loans or something crazy like that. So they are very large, and they have a very large footprint when it comes to the lending business, which again is something probably essential for them, given that they don't have other or as many other business activities to help keep them afloat if loans have any issues. And lastly, for their pros, I do like that they're in Detroit. I like to see that, and yeah, they've been in Detroit for a while, but I like to see that Detroit is climbing its way back up. They've done a really good job rebuilding that city. You know, it's hard to watch such a big city and one with so much history in the United States take such a big hit. And so seeing that they're kind of on the up and up again, real estate's been doing pretty well there. We have now Quicken Loans is based out of there. And so I like seeing that business is going back to Detroit. But unfortunately, that's about where the good news ends for me when it comes to Rocket Loans. Rocket Mortgage, Rocket Companies, whatever their name is. They have so many different names I've seen. My next concern is that they do still have a licensing deal with Intuit that is set to expire in 2022. Now, again, these details are pretty vague. I didn't have the time to look and see if I can get any information from Intuit's side about this deal, but Intuit has the ability to basically terminate the license agreement they have at any time between now and 2022. I'm sure there's certain conditions or stipulations, but that can create, again, two things. It can create an issue with branding, and it can also just create expensive court costs. And for a company with as much information as we have that doesn't have the strongest balance sheet I've seen, court costs are definitely something we want to see them stay away from, because it's going to take away from new business activities. It's going to take away from their bottom line of profitability if they have to go down that path. So having in a loose end with Intuit until 2022 is something that makes me not very confident with it, or something I would just like a further explanation as to what would be the effects should Intuit decide to terminate this agreement. And speaking of expensive court costs, they also took out a very large amount of debt prior to going public. Now, one of the biggest reasons why companies go public, and I'm sure everybody knows this, is because it is a way of them raising money. Once they issue stock to people, they don't make any more money off that stock issuance, which is also a downfall. I believe they're expecting around $3 billion or something and only walked away with like $1.9 billion. So I don't think they received as much from this IPO as they wanted to. And again, it's just strange to know that they took out such a large amount of debt right before they were about to receive at least $1 billion from people that they wouldn't have to pay back to anybody. Now, I have, again, a few thought processes here, and one of them does have to be with them not receiving as much in interest payments. They might have needed to take out the debt so that they can continue business operations. Again, this is stuff that we don't know since they haven't had an earnings call yet, and so that might be why they took out the debt. But I just think I need a little bit further of an explanation why you would take out debt and go public. And I really hope that they didn't take out debt to buy something and then went public to pay off that debt, because they could have just waited a few months and would have not had to worry about making payments and ultimately paying more for something than they would have had they waited until they went public. Another issue that I have with this IPO is the timing of it. It's a very small, minor detail about this, but I do think it's strange for a lending company to go public in a time where there's a lot of loans in forbearance. People are hesitant about future outlooks in their careers. People are being very conservative with their money, and savings rates are at their all-time high. And really the only reason I could think that they would decide to go public right now, other than it maybe being in the plans for years for them to go public in 2020, is that they might need the money right now to continue business operations, like paying employees, making future acquisitions, or just keeping the lights on. And so I really hope that they're not using going public as their way to keep the business afloat. And here's another one that I had an issue with, and that has to do with the dividend. Now, one of the big reasons, or one of the main reasons why people typically invest in the financial sector is because of the dividends they pay out. Sure, there's other areas like utility might be a better place to look, but banks typically and other financial institutions like a JP Morgan Chase pay a pretty strong dividend consistently. Now, that's okay that they don't pay a dividend, because in the same fintech space, we can look at companies like PayPal and Square, which are great investments and also don't pay a dividend. But my main issue has to do with the consistency in when people ask the founder and CEO about the dividend. So in an interview with the CEO and founder of Quicken Loans, the founder said that they really do not plan on paying a dividend in the future. In a separate interview, I heard the CEO say that he really hopes they're able to pay a dividend in the near future, and that's one of the main goals they have. Obviously, that's two completely different responses, and it had me a little concerned, because if they paid a dividend, I might feel a little bit more optimistic about this stock. But since they don't, or since we don't know, it was a little confusing. So I actually had to do some research here, and I'll pull that up one second. Yeah, so I went onto their investor relations page, which was not easy to find either, and they have like an FAQ section, and one of the questions there is about the dividend. And the response they have is, we do not currently anticipate paying any dividends or other distributions on our common stock. So that really doesn't answer the question for if they're going to pay one in the future. While this is an IPO, I've seen a lot of people use the misleading term of startup. This is not a startup company. They've been around for 35 years. They're the furthest thing from a startup. So it's not necessarily uncommon for companies to hit the public markets and pay a dividend if you've been around for so long. But it just seems to be there seems to be a lot of uncertainty with their dividend. And again, I'm not a huge, only invest in dividends, quit your job, make money from stocks, whatnot. That's not my style. I like dividends as a way to protect my investment accounts and still create income, but I also like growth stocks. And so, I say that I'm very much in a mix of growth and income. So it's not a huge make or break decision for me if a company pays a dividend or not, but I just wish there was some clarity as to the intentions that Rocket has when it comes to their dividend payments. And kind of the last gripe I guess I have when it comes to this company is just my personal experience as a real estate agent. So one of my first clients that I was working with was submitting was submitting offers on houses, and we weren't getting anything accepted. And finally, the agent reached out to me and said, best of luck. I hope everything's going all right. And we were kind of talking about it. And I just asked him, I was like, what could we maybe have done to present this offer better? Or what could we have done to make this offer stand out more? And this agent was nice enough to tell me the biggest reason why my client's offer was not accepted, it was the same offer as the one that was accepted, but they saw that we were using Quicken Loans. And the agent told me that she has had nightmares working with Quicken Loans in the past, saying that they were missing documents and they didn't tell anybody about it. They had to keep pushing back closings as far as 3 months after the original date that it was set for. They were unable to fund loans on closings. They missed wire transfers. They sent too much money, so many different reasons why these transactions have gone south. She just said that if there's the opportunity for her to work with anybody other than Quicken, she's going to hop right on it. Now, that is one person and that's one take on it, but I have read reviews and have seen something similar to that, and it actually seems as time goes by, they seem to get a little bit worse and worse with the quality of their service. So take that with a grain of salt, but having that as professional experience and knowing that one of my clients missed out on an opportunity to buy a house because they were using Quicken Loans does mean to me that I'm never going to recommend them as a real estate agent. The other gripe I have as a real estate agent is that they are a mortgage lender, and I typically like to refer my clients to a mortgage broker. The difference there is, being a lender, they basically loan the money out themselves. So with that, they usually do, not all the time, but usually do have a higher interest rate. Me, with my finance background, I want my clients to get the best deal. That's why I have a really good broker that I refer everybody to, because he actually shops around and finds what's going to be the best rate for my clients, what's going to give them the best bang for their buck, what's going to be the best option for them, and one that won't be charging a premium in a time where interest rates are pretty low. So again, not only did somebody else tell me that they will not work with Quicken, I typically don't recommend Quicken either, just because I use a mortgage broker, not a lender. And truthfully, I don't get paid any differently if they use anybody they want. So that part really doesn't matter to me. I just refer them to somebody that I know is really good at what they do, extremely knowledgeable on lending, and somebody I can trust to make sure that closing's going to happen on time. So it's not a business I can say that I would ever recommend, and usually I invest in companies that I firmly believe in. So it's kind of hard for me to recommend them if I haven't had the best experiences with them previously. Alright, sorry in advance, this episode has been a lot longer than I thought, but now I just have some suggestions or maybe things that would make this a more favorable investment in my opinion. And that would really just be if they came down to, in their future acquisitions, if they either added a banking feature to their lineup or accounts, whatever you want to call them, or if they acquired an insurance company. So I would actually prefer the insurance company. Reason being, insurance companies are money-making machines. How many times do you pay a monthly payment for something you don't actually end up using? And if you really wanted an IPO to look at to see those results, look at a company like Lemonade. They have done very well since they hit the markets, and it's because it's insurance. I mean, insurance is always like a pretty sound investment, Again, because people pay these premiums for something that most of the time they don't use. Especially in a time like right now, insurance companies are holding on to a lot of cash because people aren't able to use able to complete like their typical surgeries. You know, if you needed like a knee surgery, that might be pushed off for a while because of the coronavirus. So insurance companies have a lot of cash right now. They always generate a lot of cash. And I think that would be a good fit for a lending company to also be able to offer insurance. When it comes to the banking feature, while it's not as much of a cash cow as an insurance company would be, it's pretty similar to being a lender. You know, they both handle money, they both handle like interest rates. So I don't think it would be too far-fetched of an idea for Rocket to add like a high yield savings account, a checking account, or maybe something even similar to like a Cash App in their account, so that way they can receive some of those smaller transactions. And people generally interact with your bank more than you interact with your lender. So I think that would be one of the things that they need to focus on too, is continuing to drive people to Rocket to use their other services that they provide. And a bank feature would absolutely do that for them. So again, longer episode than what I thought. Final outlook, not an investment I'm going to buy right now. I want to see a few more quarters, even a few years go down and see how this stock performs, what kind of news comes out. Love to see the Intuit thing get axed real quickly before I make any purchases in it. That being said, you might see it differently. So again, this isn't advice. This is just my take on it. I see a lot of people out there are bullish on this company, and rightfully so. But in my opinion and in my experience with investing, it's one that I'm going to sit on the sidelines with, at least until we have more information about them. So thanks again, Pom Pom, for the suggestion and for the video. I really enjoyed looking into this and I learned a lot about it. Hope all of you enjoyed this video as well. So if you have any other companies, please let me know and I'll be happy to take a look at them and do a quick video on them. Maybe not so quick. This one turned out to be pretty long. So let me cut it off there and I'll stop my ranting. Thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me, so I really appreciate that. If you like this video, just give it a thumbs up. If you want to subscribe, that's cool. If you don't want to subscribe, I won't take it too personally. Alright, but I will see you next time. I am so awkward at endings. Sorry, I'm trying to get better at them.